Hey everybody, welcome back to the channel. Today I have a special video for you. We're going to do the AM Silver Bullet on Tuesday, August 15th, but I'm also going to show you the trade that I set up that I took between 9:30 and 10 a.m., the opening range trade setup. Okay, so when we came to the chart during this opening range, that we had the buy side liquidity was taken, we had a market structure shift. We look for the fair value gap right here, and that's where we're starting right here at 9:45. And I'm going to buy or sell based on TradingView, go candle by candle, but I'm going to show you how I took this trade and what I looked for when I saw it. Okay, we're just going to keep playing this out. I'm going to show you what I saw. Okay, so right here I took the fib from the high to the low, and I know that equilibrium is right here. Now I'll take a trade to the fair value gap, but I got to be up here. Max is 5 handles, but I'm aiming for the new week opening gap right down here, because I like to go from new week opening gap to new week opening gap. We have break of structure. We have 2022 mentorship model right here. Ideally, you would like to wait to try and get up to the equilibrium, but you can take it right here if you'd like. Okay, so let's see what happens here. Alright, so I'm going to sell 2 there. I'll put my long entry on the new eco or the fair value gap, and we'll aim for this low here. That's 1 to 3. I'll take a partial. After below that low, I'll take a partial. So let's see what happens. Yeah, I do want to show you that there's an inversion fair value gap right here. So if you're looking at this fair value gap, when it left behind, that's a bullish fair value gap. So we're looking for price to come down and trade back up. When it trades through it and trades back up into it, that becomes an inversion fair value gap, looking for resistance to go back down. So that's, just wanted to point that out to you to see the inversion fair value gap. You could have entered down here as well. That being respected as another confluence that we're in the right side of the trade. Okay, there you go. Buy one there, take one off. My stop will be at break even, so let's move it. Let's throw that on here. Trailing stop would be right here. Alright, let's just see what happens. Alright, let's flatten that right there. Okay, so right now, this was the 2022 mentorship model. Now, this dark gray area starts the 10 a.m. Silver Bullet hour. Now, I get a lot of comments about, hey, why do you use the 2022 mentorship model during the Silver Bullet hour? Why not just trade the way the ICT teaches the Silver Bullet, where he says look for a pool of liquidity that hasn't been tapped into, and if you can get a trade set up like a fair value gap in that direction with displacement, take your trade that way and just aim for, the pool of liquidity. You don't have to have directional bias. It's just aim and go. Well, if we are trading it that way, right now at 10 a.m. our bias would be the new week opening gap, right? So we're looking for entries. Well, if we did, we could have found an entry right here. Gave us an entry to go short. Could have been a Silver Bullet entry right there. Just a continuation right there to the new week opening gap. Okay. We didn't take that trade, but I'll mark it on the chart just so you have it on here. Okay. We see right now we have sell side liquidity has been taken. Let's mark that on there. And we have a fair value gap right here. Is there enough range from this fair value gap low to here to get 10 handles? Well, there's 10 handles here. So yeah, you could. You'd have to get up a little bit higher up in here. So you'd want to have a little bit more of a range. So if it comes up a little bit into this fair value gap, you can take it. And we will. We'll take a trade if it goes up into that fair value gap. Now if it hits it before coming up here, that cancels, that voids the trade, okay? And that didn't get us in. And that didn't get us in. Just kind of ranging right now. Alright, there we'll sell to, right there. Sell side liquidity has been taken down here as well. Alright, so let's go short here from our entry. 10 handles, 5 handles stop is the most we can do, 1 to 2. Aim for the new week opening gap. Take my partials right after it goes past here. So let's lower this down to 1. I'm a big fan of partials. I always take them around 60% or so. And I move my stop to break even. So when I do that, I'll move my stop to break even. +1. So it's a risk-free trade. Okay, that one would have taken 1, so I'll move that. I'll move this to right here. I get asked in the comments, what happens if you take your partial and it takes you out? I'm fine with it. I still made money. I'm preserving my capital. Risk management is the name of the game. It's not about being right or wrong. It's about how much cash you kept. And I like keeping my cash, so I will move my stop aggressively. That probably would have taken us out. See if we have one closer to that. Alright, I'll use that right there because I don't know if there's any more. That one right here would have taken us out right here. So let's just flatten that here. And that one definitely would have taken us out right there. So there's your 2 trades right there. Let's see. Now again, liquidity has been taken out. That one probably would have taken us out. Liquidity has been taken here. Now let me just zoom out here and show you where all this liquidity is. This is for last Friday's AM session low. So last Friday's low. Here's Monday's low of the day. That's where your liquidity has been taken. So you're taking out daily lows at the moment. Okay? So sell side liquidity has been taken. Now if we get a market structure shift, we might be able to go long. So I'm going to move this out of the way. Alright, let's go back here. Now, if I've already taken these 2 trades, am I taking another trade? No. I've already hit my target for the day. I'm good. But in this demonstration or this example, I'm showing you how you could have traded this. Okay, so you could have seen a market structure shift right here, because that's the swing high that created this swing low here. Okay, you do see a very small fair value gap right here. Alright, so now if it trades back in there, right there, we'll buy 2. We'll put our long position here. It goes below this. It's 3.75 handles, and we'll risk 2, go to this high here, aiming for that, and we'll see how it trades, how it goes. Alright, that's probably where I'll be taking a partial. So I'll sell 1 there, move my stop, 1 plus break even, that's where I'm at right there. Alright, so I gotta flatten that because that would have taken us out. See how the rest of the hour goes. Alright, let me take these long positions off here, explain how it worked out. Alright, so the 9:30 to 10 a.m. trade setup was the 2022 mentorship model. We had higher time frame liquidity has been taken. We had a market structure shift. We had a fair value gap. We pulled our fib here and noticed that equilibrium was right here. Price did trade up into equilibrium, so we were able to to short in a premium. So we took our trade setup. We also noticed we had an inversion fair value gap, which we could have taken another position on, but we decided not to, but it was in our favor, so we were happy about that. We did take our partials when it got past, closed beyond this low, and we hit our target. Okay? Now, that was the 9:30 to 10 a.m. trade. The first silver bullet setup, we could have gotten in right here based on ICT's rules of looking for a pool of liquidity, which we were looking for down here, or any of these actually that haven't been hit yet could have been our targets, and taken our trade setup. And when we saw a fair value gap, we could have taken our trade. We waited, we saw this fair value gap, aiming for the new week opening gap here. Price came up into it. We took our trade, took our partial below this low, and hit the new week opening gap. We got out of our trade. TP hit on both setups. Then, had we not taken either of these trades, we would have seen 2 daily lows being taken out. And then we see a market structure shift. We see a very small fair value gap. And when it traded back down into it, we took our trade. We had very little risk of 3.5 handles, or almost 4 handles. And we took a partial, about 60%, and we took a partial at 2 to 1, or 1 to 2 risk to reward ratio. And that's what we got. That's our 2 silver bullet trade setups and the 9:30 to 10 a.m. opening range setup for Tuesday, August 15th.